Good evening, everyone. It's Chris from Solstice ATR. Hope everybody's doing great. You can find us on YouTube, on Twitter, Instagram, Discord. We use this adaptive algorithm for our trading, side market, up market, as well as down market. That means bullish and bearish sentiment. Remember, we are technical traders. We're not a broker-dealer. Our past performance doesn't give us any indication of our future results. Use at your own risk. And data may not be copied unless requested, and check the website policy and you can reach out to us. And if you like this video, smash it, subscribe to YouTube, and if you have questions, let us know, and your commentary. Let's first go to the first slide. What I have here, in Silicon Valley, we have some bank failures. Would this failure kick a leg down to the bear market, or is this factored in? I have some sectors here, the New York Composite, mid-cap, the bond market, XLK, the tech sector, RSP, the 5 to 7 year, XLV, XLF, the financial, XBI is the biotech, SPY is the S&P 500, SCHA is the Schwab small cap, or you can use the IWM. We have as well SPSB, which is the corporate bonds. QQQ is the Nasdaq and the Dow Jones Industrial Average. I use these ETFs. What I want you to do is pay attention what sectors are moving up and what sectors are not moving up, so that way you know what to do, where to look for levels, and understand it. We are not biased to either side. Trade what you see on the charts. Rule 1, protect capital. Whenever you enter a trade, know where your exit is. If you are wrong, when you have a target, you take the first target, second target, trail your stop so you don't turn a winner into a loser. Be fluid with the market because things can change. The prior week, we had a nice week up market, Thursday and Friday. And this week, since the sell-off, after the Federal Reserve announcement, we had the Thursday, Friday down market. Is this going to do one more time a kickoff to the downside? What I'm going to do in the second slide, use the volume profile, explain it a little bit for the long term as well as the short term, how you can use it for your advantage to actively trade. And we'll go do a couple of slides and we'll keep it short and brief, and let us know how we can help you. In this, I'm using the volume profile for the daily trading as well as swing trading. This chart represents 6 months. Each of these patterns represent 1 month, from beginning of the month till end of the month, where there is point of control is that burgundy color. Sometimes the time spent and the point of control are the same. Sometimes they are different, as well as the value area high, which is the shaded area, and the value area low for the volume profile. On the right side, it's the time spent, where the volume profile high is up here and the volume profile is down here. And vice versa, the time spent is usually that green shadow that you see here. So what we do, we use the volume profile in order to let us know if the sentiment's going to be bullish, sentiment's going to be bearish. Are we trading inside the value, above the value, or below the value, or are we coming from the bottom to enter the value area low to continue to the POC, the time where most point of control is and the most contracts are? Or are we entering from the top, coming back into the value area high like you see here? And vice versa, if we enter and bounce back up, the sentiment is bullish. If we come in from the bottom to the value area low, we continue higher, we look for the POC. If it fails, sentiment is still bearish. And we're using Fibonacci measured moves. You can ask us how to anchor them, how to use them. They are not regular Fibonaccis that you think, where the high is, where the low is, and this is your midpoint, this is your 23, this is your 38, 61. It doesn't work that way. It has to do with where the 50% in relationship to the time spent, using the expansions to the upside or downside according to divergence in the market. If you want some more information and more advice, give us a jingle, and that's how you can get a hold of us. Last but not least, this is the last slide I usually do. This is how you can check the website. You can get in contact with us. And once again, it takes us time to do these videos. Do hit the like button, smash it, and subscribe to YouTube. Let's go to the first slide that I have here. I have the S&P 500, the weekly chart, which is a 5-year history, showing all these relative information that happened from COVID-19 to March 23rd, the rally in 2020, consolidation till about November, then we had the rally till December, then we had the January low, we rallied till November, December, then we fell off, we looked above in 2022, fell back down, and this is the Silicon, if I zoom in here, you're going to see that it says Silicon Valley Bank. Is this meaning we're going to have a problem in the banking sector that drags the overall market down? Because you can see we were looking up last week, we consolidated, then this was what? Friday, Thursday, Wednesday, Tuesday, Monday was an inside day. Even on Tuesday was an inside day. We did not lose this bar. We were in an uptrend, in an up wedge. Then we fell to the backside of that downtrend. Does this mean we're going to continue back to the 200 SMA, retest it, back to the 250 in the backside of this rounded bottom, which is the June in the prior year? This is the October. Do we create a shoulder in this area where the 200 SMA and this 36 hold us? Or do we reverse back up after all this noise that has happened in the market? This is the SPX. What I'll do, I'll use the NYA. We'll go to the daily chart. We're going to use the NYA. You can see the weekly chart, how the New York Composite, which represent the overall general stocks in the overall market. We have at the bottom a divergence, which is DMI, and a momentum indicator in relationship to the momentum that's being used. We can see that the annual Fibonacci was up here for prior year in 2022. This is low. These are the extensions to the downside. If I zoom in here on the daily, we can see that we had a very major sell-off on Friday after the Thursday consolidation. We looked up, failed, couldn't make it. Friday, we looked up. Everything was fine. All the news that hit, we ended up on the weekly losing the 18 SMA, the 50 coming back to the annual 38.2 fib. Does this mean this is going to act as support, or is it going to fail? Sometimes coming back down. This would be the 61.8. That's the 50, and that's the 38.2 if you draw from top to bottom or bottom to top. So this is your 0 line to 100 or 100 to 0 line. This is your regular annual Fibonacci's. Has nothing to do with the measured move. At least you see where we are in relationship on the NYA. If I take a look at the RSP, we can see that the RSP, this is the S&P equal weight. We can see that in the stock market, the equal weight retraced a little bit. Doesn't mean it's going to hold the 61.8 or come back and retest the 200 SMA. We have to pay attention to it. I'm going to look at the XLK, which is the tech sector. We know we were starting to rally. We had Netflix, so it did hold last week's range. The last 2 days, we had a small sell-off. If I do zoom in here in the XLK technology sector, you can see we pushed up, we consolidated. Then on Friday, we had the sell-off, but we did hold the 50 simple moving average in the 18 SMA in the tech sector. Let's pay attention. It is still in an uptrend. I know we are in a wedge. You can draw an uptrend here in this uptrend. We have not lost the backside of this channel, which will give us a little bit more problem. Let's take a look at the bank sector or the biotech. I'll do the biotech first. XBI or IBB, it doesn't matter which one you look at. You can see in the biotech sector, we created a V shape. We were consolidating, trying to lift, and this was the sell-off in the biotech. We have to pay attention to the healthcare sector and the biotechs to see where we are. We're going to look at this. Let's take a look at SPSB, which is the typed it wrong. SPSB. and you can see here that's the portfolio for short-term treasuries. You can use the IEF, you can use the ZF. We can see that in the bond market, interest rates spiked up, and the bond market sold off. Is this consolidation because we had an inside weak range? We looked below, then we rallied back up, and we are holding inside that. But this is the part of the corporate bond. Let's keep an eye on the corporate bonds, as well as the Charles Schwab small cap, as well as the mid cap SCHA. This is the small cap, or the IWM. You can see the sell-off. It was very sharp. It tested the 61.8, missed the 250 SMA on the weekly, but bounced back, didn't clear the 200 SMA. If I take a look at SCH this is the large cap growth ETF from Schwab. We can see it's in the same situation here on this sell-off. We have to pay attention to what the coming candle is. It's going to depend on the policy, the CPI report, inflation, as well as the interest rates, what the Fed's going to do, because this is the wild card. Still, if you notice my last week's video, I've been using, the Joker to keep an eye. Is he in jail this week because of the situation that happened in the banking sector? Let's take a look at the one more ETF. I'm going to look at the JNK high yield bond. You can see in the high yield bond, we were, nicely coming back up. All of a sudden, in the last 5 days, we had the sell-off. We tried to rally on Thursday, then on Friday sold off. If I take a look at the TBT in relationship to interest rates, we see that we had the spike up and the dump in the 20-year Treasury bill interest rates. So we have to know what the government is going to do and the federal policy in relationship to what's going to happen in the next week or so. So let's go one more and take a look at the dollar sign DXY, and the dollar sign, or you can use the USD or UUS. So it depends what platform. If you want to use ETFs or the dollar, we can see where the dollar is. We had a nice reversal back in the dollar. We had the rally, then we had the dump, then we had the rally, then we had the dump on Friday. You can see this candle is undecided. It tested the 50 SMA, tested the 18 and the 5 on the weekly, and just sat on the 50% Fibonacci for the annual chart from last year, 2022 low to the 2022 high. We looked above, we were rallying back up, and on here we got a little bit of a reversal back to the downside. Let's take a look at the VIX, and I wanted to use the VIX in relationship to the overall market. We can see we were range bound at the bottom, or you can use the VXX or the VX for the futures. We can see we were in the range of the $3 and $18, and all of a sudden we looked up on this rally up on Friday. Then on Friday it sold a little bit off after the push up. So do we end up clearing that 26.2550 in order to continue higher and get a reversal? Because we were in a downtrend, this is no longer valid. We can remove this. We can as well remove this channel. We are still in that wedge trying to push up or push down, so we have to pay attention to what the market offers us. Let's go last but not least. I'm going to look at the micro ES, and I want to do some anchoring for you, not on the weekly charts but the daily charts, to show you how to use it in the 4 hours. We're going to go to the daily 1 year. You can see we were in a nice uptrend, on all of a sudden this week, in the last 5 days we sold off in the S&P 500, and this is represent either the SPX, SPY, or the micro ES, or the mini ES, which is the S&P 500. We can see those last 4 days were very heavy to the downside. Does this mean this area here from December and the January candle, which was on the 6th, from the beginning of the year, we looked down to that 3,900. Does that mean the 3802? Does this mean it's going to hold us up and reverse back? Because we did not close at the 3,900. We're a little bit on the downside. We closed at the 3,915. Is this going to be a major event in the S&P 500? So what I want to do, go to from the daily. We're going to go time frame. We're going to go intraday. We're going to use 20 days. We're going to use 4 hours. In this 4 hours, it's going to show you the overnight action. It's in gray area. But what I wanted to let everyone know, we were in range from Sunday. This was the high on Sunday. Then this week's sell-off. So what I want to do is get an overall weekly range from high to low. You can see we looked down, but we didn't close on the morning low of Friday, but we looked down and we tried to rally back up. Is there going to be just a look below because of the noise that happened in the market, and they find that, hey, there may be value, or we're going to get one more leg down? So we know that on the weekly base from the Sunday, we can edit the property. So I want you to see what I'm doing. This is my weekly highs for the fib extension to the downside or the upside. You can see it's 200%, minus 100% from the 0 to 100. We can always make them that color, or you can change them to an off-white. We usually go from Sunday through Friday for the weekly range. We know whenever we are in the territory of the 20%, 0 to 20, we usually get a bounce off. Do we clear this area to continue back up, or do we get another leg to the Fibonacci's, to the bottom extensions, and find some support around the 61 or the 80% for a bounce back? Or do we reverse back to the 61.8 to the upside, which is in this area here, and we can get back to this area in the prior week's range? So this is the weekly measured distance, nothing more. Just gives you a calculated risk where your entries are, where your extensions are in relationship to the downtrend or uptrend. Pay attention to price action. We have turned from being bullish to short and bearish on the sentiment on a 4-hour, 20-day, because we are in a downtrend. What you can do is get a channel and draw these channels. They will help you stay in focus if you are in an uptrend or downtrend. And you can do the same thing here, because we lost this channel. You can see, or even if I anchor it to here, you can see we were in a downtrend. We tested that area and got a nice bounce off. So even if I grab this one or I grab this one, for me, this is a downtrend. Do I get back to the 50% of this range, or do we continue and lose that area in a linear regression downtrend? So the most important thing is to pay attention to price action. For the buyers and the sellers, usually there is always a fighter on the buy side and the sell side. The most important thing is paying attention to the directional momentum indicator. Whenever the directional momentum indicator on the positive side starts moving from 15 in the direction to the 40, the momentum changes to the upside. If the directional momentum loses it and the DMI negative directional momentum indicator from the bottom starts moving back up from 15 to the upside, we can see that there is a change in trend. And on Friday and Thursday, that sell-off gave us a little bit more momentum to the upside, and the MACD or the RSI or the stochastic, the CCI, fell off, and we came back a little bit more down. And I use on a MACD, instead of using a 12, 26, and a 9, I use a 9, 18. You can see it in the label here, 9, 18, and a 7. It gives us a little bit faster entry for reversals, whether you use it on a daily, hourly, 4-hour, 5-minute, 15-minute. You have to understand the long time frame in relationship to the short time frame. I hope this video helped you. Have a good night, and look forward to seeing you on Discord.